Real estate. Welcome to the Critical Point Podcast, August 3rd, giving you an update through July of the NARIET Index of Real Estate REITs. You can find it at NARIET.com. And I've created an annual chart here with a model of business cycles that shows major long-term to major super cycle fluctuation in REIT prices relative to an index. Now, what we can see is back in the 70s, there was a third most important type of super cycle low. And then the fourth most important, in fact, it's the smallest super cycle low, came in around 1990. The second most important super cycle low occurred with the 2008-2009 Great Recession. So you can just see a crushing blow to real estate valuations relative to REITs. I remember doing some research to see what was going on in some cash markets, and I found like a lot on the Florida Gulf Coast, and that lot had exploded like 100, 200% or something like that, 300% going into the Great Recession, and then crashed 90% off that Great Recession. Okay, the largest of super cycles, the primary and major long-term cycle, is one that relates to the 1929 crash. And we may very well revisit that in the 2040s, perhaps even as soon as the late 2030s in the financial markets, U.S. economy. And I believe we probably will see a crushing blow to real estate valuations and to this REIT index. Perhaps 70-90% drop, by the way. In the meantime, the super cycles should be up from that 2008-2009 low and the 1930s low for the U.S. economy, stock market, somewhat for commodities, although commodities can stall out for many years at a time within a super cycle. But the super cycle should be up for real estate as well. Now, frankly, I think real estate has been high priced, and rentals are just obscene and really a tax on the middle class and poor, especially the lower middle class and poor. The U.S. recession relative to the virus probably corrected some of that, gives it some upside room. But I kind of feel like if it really didn't correct much, I question how much upside is there in real estate for the remainder of this super cycle bull market. Okay. But I will say that with the money printing, there's increased interest of discussion of inflation. And inflation can occur in the next 15, 25 years. I think a super cycle is bottoming this year, next, for inflation and interest rates. And that could mean there's more upside. And I realize in real estate, I want to be a bit of a bull here in real estate relative to at least what we're seeing here with this REIT index, which does have some correlation with the stock market. The stock market does impact it a bit, okay? At any rate, if we break all those super cycles down, we get into a major cycle called a long-term that might only create a minor drop. I think it was like 15% or something like that. It can create larger drops. And really, we just saw one that was rather exaggerated by the drop in the stock and by the virus recession, okay? Nevertheless, it was a 9-year cycle, and it topped the latest year forecast by the model. Collapsed. It's not the latest year for a bottom. It should bottom no later in 2021 if with the recession. There's some research suggesting we might have to allow one additional year going into 2022. But the point is, it's getting late. It's time to bottom. And so far, this is a nice recovery. And I'm seeing some decent recovery in the PMIs at this time. A recovery in PMI suggesting maybe a low is in place for the economy. So please see my podcast on the economy here that I'll probably put out today as well. Nevertheless, yes, there's a chance for backfilling, maybe even lower for this index. There's downside risk here for the next year or two. But ultimately, it should eventually work higher into a 9-year cycle top that somewhat correlates with what we're seeing for the economy and stock market, suggesting 2027 on into about 2031. Now, for the stock market, we have eliminated 2027. We think its minimum year can stay up 1 year longer. So it's looking rather bullish here, but the problem is how long is it going to take to get the economy back? We're going to lose some jobs for quite some time. How is this going to translate in risk of rentals and buying and selling and flipping of homes? So I'm concerned this index has a little bit more risk than even the stock market right now. So trying to be a long-term bull within a super long-term bull market for real estate relative to the REITs. And now we'll go look at a shorter-term index. Okay, so this is the monthly chart of real estate S&P REIT index. I'm using a symbol of FRI. At any rate, we could see we had a positive reversal month last month in July, but it's still off the June high. You can see it's lagging the S&P 500 that would be up near its February high right now. And that's understandable because there's just more economic damage there, especially if people aren't paying their rents, right? And so ideally, there's going to be a setback in August here for the stock market, but boy, we've had a tough time trying to call that top, all right? So just don't know. I'm watching this particular index during the week to kind of give us a feel how the month is going and then relate it to that NARIET index. Momentum seems to be up and rather bullish, so maybe it's going to continue to recover, but like I said, I'd like to see a little more consolidation setback here. And I question how bullish will it be for the rest of the year relative to the S&P 500. And I think that concept is understandable relative to the damage here relative to the recession, okay? Even bank stock indexes aren't doing that well because they're tying up more and more money for the reserves for any bad loans. Whereas you look at the S&P 500 and your Amazon stocks, your momentum stocks, they've been doing great guns here. At any rate, that's the index for the S&P REIT index. And we'll just see where we take this. But and again, I think it's going to be a slow developing bull market. There can be some hesitations, but I'm actually long-term bullish this decade for real estate and perhaps even next decade. But someday there's going to be a day of reckoning for practically everything in this country. If any luck at all, that's about 15 to 25 years away. Manage your risks relative to knowledge to others. And thank you. I'm Rich Pawson, and you probably heard my assistant, our dog, Mila. Thank you.